Welcome back to the Thinking Crypto podcast, your home for cryptocurrency news and interviews. If you are new here, please hit that subscribe button as well as the thumbs up button and leave a comment below. If you're listening on a podcast platform such as Apple, Spotify, or Google, please leave a 5-star rating. Now, before we get into the crypto news, just a quick heads up. I interviewed Congressman Bill Huizenga. I uploaded that interview today. You could listen on all podcast networks or watch on YouTube. This is a very insightful interview. I highly recommend you watch it. He's part of the committee that oversees the SEC. We touch on how they're going to hold Gary Gensler accountable in 2023. We talk about FTX. We talk about his meeting with Sam Bankman-Fried, and he pretty much says Sam Bankman-Fried is arrogant and much more. So we talk about the digital dollar regulations. So be sure to check out that interview. A lot of important takeaways there. Now, it was a big day for crypto. Lots of big news I want to share with you all. I want to start with Visa because Visa continues to invest and build in the crypto market. They're setting up massive infrastructure, my friends, wallets and pipeline to bring CBDCs and all kinds of stable coins through the Visa network and other financial networks as well. And we have Catherine Gu, and let me give you her exact title on LinkedIn. She's the head of CBDC and protocols, building crypto infrastructure at Visa Crypto. She tweeted out today a couple articles, which I'll run through, but she also put a full thread on what they're doing at Visa. So she tweeted out, at Visa, we want to serve as a trusted bridge between the crypto ecosystem and our global network. Excited to share some updates today. Here is a thread. We have been closely tracking the development of the crypto ecosystem and many new technologies and innovation that are evolving very rapidly. The best way to stay engaged and for us to actively contribute to the technical development in the crypto ecosystem is by learning by doing. She continues here saying, we are deep diving into Web3 infrastructure and blockchain protocols with a focus around areas that are very important for payments: security, scalability, interoperability, and privacy. My friends, just look at what's happening here. Sit back for a second. FTX collapse, Sam Bankman-Fried arrested, Celsius collapse, Voyager, and all that. Lots of fear, lots of FUD, lots of people, the critics who have hated crypto are coming out of the woodwork now, crawling out from under their rock saying, see, we told you guys. But when you filter through that noise, you see big companies like Visa investing and continuing to build because they know markets move in cycles. Every market has a speculation bubble. We are in a macro correction right now. It's not just crypto, stocks, real estate, everything, right? Because the Fed is raising rates. So there's a lot of pain out there. So a lot of people will take that and say, see, crypto is crap. It's this and that. But we know the underlying technology is here to stay. It's here to be part of our economy and the next layer on top of the internet, and it's disrupting. So you got to filter through the noise because these naysayers existed for the internet, the automobile, the airplane, and many things and so forth, right? So here, Catherine highlights an article from Visa, and the title is Auto Payments for Self-Custodial Wallets. And it talks about blockchain and crypto and the integration. And she also links to a new article they published today that's called Exploring New Avenues of Blockchain Innovation. And they talk about cryptocurrencies and bringing auto payments to the blockchain and all the big things that are happening. So I'm not going to read through the entire article, but you guys can certainly go read it. It's really insightful. And once again, this is Visa. This is not some mom and pop shop. This is not a new startup in the crypto industry. This is a legacy traditional financial player building, adopting the technology. Don't miss what's happening, right? You got to filter through the noise to see facts like these. Now, the mainstream media is not going to cover this, right? This is not sexy. This doesn't drive headlines, but it is straight up facts and important information that you as an investor, that this is what you want to focus on. Who's building, who's investing, what's on the horizon. And we're seeing some big adoption here by Visa. Now, we also got big news that Binance US has agreed to buy Voyager Digital and its assets for $1.022 billion, representing the fair market value of in the Voyager's cryptocurrency portfolio, and an additional consideration of $20 million in incremental value. Big move by Binance, CZ and Binance here. And there's a couple of layers to this. One, with the buying or the acquisition, hopefully, they can help restore the funds of people who lost their funds because Voyager was obviously went down, filed for bankruptcy, and so forth. And I'm hoping those of you who are listening and watching, you get your funds back. That's the most important thing. Second, it really puts to bed a lot of the FUD around Binance, that they're not, they're not solvent, they're having problems. They had a lot of withdrawals, rightfully so. Not your key is not your crypto. I highly recommend you self-custody. And but they were able to survive that withdrawal, and that was pretty big. Billions of dollars left the Binance exchange. And CZ, to his credit, has been public, and he has been putting out the fires or the FUD, putting those things to bed, because there's been a lot. And some people have accused me of spreading FUD, but the one thing I highlighted on Twitter that I said was a red flag. It didn't, and I made sure I prefaced the comment by saying I didn't believe Binance was insolvent or they're going to collapse or go out of business. I said the audit company that dropped Binance and other crypto companies, it's a big red flag, right? They just close shop and they're out. Now, you may say, well, that doesn't reflect Binance specifically, but it is a red flag. But a red flag to take the action of move your crypto off the exchanges, whether it be Coinbase, Binance, I don't care. Just move it off the exchanges, because we are in a very different economic environment right now. So you want to be careful. I'm not saying you shouldn't use Binance. I'm not saying Binance is going out of business. Sometimes people only want to hear what they want to hear, but I need to present the full situation, the full scenario, so you can make informed decisions. And that is, if we see red flags, we have to flag them, but we also give credit where credit's due. So big move by Binance here to help the crypto market, to help Voyager users. And it really puts to bed the situation. Oh, they're not in a good situation, or they're having problems. So big move. And as things progress with this deal, hopefully we can get some more details, and folks can get their funds. So the Binance US bid aims to return crypto to customers in kind in accordance with court-approved disbursements and platform capabilities, Voyager said in a statement. Binance CEO Changpeng Zhao, CZ, also known as CZ, said had said last month the exchange's US wing would be making a fresh bid for Voyager Digital. CoinDesk had earlier reported that Binance was preparing a bid for the bankrupt crypto lender assets. Binance US will make a good faith deposit of $10 million and will reimburse Voyager for certain expenses up to $15 million. Voyager will also seek the approval of the bankruptcy court at a hearing on January 5th, 2023. So this is not a done deal yet, but it's set in motion. And once again, hope everything goes through. And most importantly, those of you who have your funds locked on Voyager, you get access to them again. That will be the ideal scenario. So this is pretty big. Shout out to CZ for doing this. Now, we got some updates from Grayscale. Barry Silbert and the Michael Sonnenschein of the CEO of Grayscale. They've been very quiet since the FTX collapse, and we all know they've been having some issue with Genesis Trading, which is one of the companies under the umbrella of Digital Currency Group. Well, Grayscale, they got another ETF denied by the SEC, and here they released some details that if Grayscale's Bitcoin ETF dreams fail, the firm may try a tender offer, the CEO says. And this is being reported by the Wall Street Journal, and I think Michael was on TV as well talking about it. So here the subheadline is Michael Sonnenschein attempts to assuage fears of Grayscale Bitcoin Trust investors after the collapse of FTX. So good to see that, they're looking to put, investors' minds at ease because there's a lot of fear out there. And there's, of course, the fear that if Genesis trading were to collapse, that could affect Grayscale. Now, Grayscale has been selling a lot of altcoins recently. Some of that could be tax harvesting for the end of the year. Some of it just liquidating because they need cash, right, to operate their businesses. It's a bear market. There's also macroeconomic problems right now. So it is what it is. I've been saying I hope they don't collapse. I hope there's no issues because that would be really bad for the market. Does that mean the market's going to die? No. But it will hurt. The prices are going to drop lower, and it's going to send more fear and panic throughout the market. Now, here's some good news. Crypto custody tech provider Fireblocks receives first of its kind security certificate. The CCSS was created in 2014, but until now, no crypto company has met the necessary standards. So what we're seeing, the silver lining of the FTX collapse is more companies are starting to get their books in order, more transparency, more audits, and showing proof of reserves. That is so important. It helps the industry to mature. It takes it to a next level. It sucks that we had to go through this hard, painful collapse of FTX to learn this lesson. This is one of the things that should have been in place already, but you live and you learn, and things are going to go to a higher security level, and you're going to see the bad actors flush out in this bear market, and the good actors, those who are building good businesses and doing the right things, will come out, really well in the next bull market and future bull markets. So focusing on storage and usage within an organization and augmenting standard information security practices, the certification was created specifically for the crypto industry. For example, it analyzes how a provider generates keys, the hardware it uses, and how the policy and workflow engine works, as well as the cybersecurity controls used. Fireblocks received a level 3 certification, the highest there is, and the most suitable for enterprises to win the level 3 standard. Multiple actors are required for all critical actions. Advanced authentication mechanisms are employed to ensure authenticity of data, and assets are distributed geographically and organizationally, according to the accounting firm Deloitte. So here's the thing. These crypto companies are going to have to up their game because guess what? BNY Mellon is offering crypto custody. Fidelity and BlackRock is here, right? These big players who have all these bells and whistles and have the infrastructure and have gone through a lot of certification and audits and trial and error and so forth. They've done it with traditional assets, and it will be very easy for them to set up shop here. So these companies, like Fireblocks, didn't exist before crypto. They're a company that was birthed out of the crypto industry and asset class. So all these crypto companies are going to have to up their game. I've said it time and time again. If they don't be careful, BlackRock and Citadel and Fidelity and Robinhood will come take their lunch. So it's time for these companies to take it to the next level. White glove service, security, insurance, assurance, you name it. It all has to be in place. Now, here's some good news, but it's not in the United States. It's coming from Japan. Wake up, United States. Japan to exempt token issuers from corporate tax on unrealized gains. Project founders will no longer be subject to hefty taxes, which force them abroad from next April onwards. So we're seeing countries around the world putting out proper regulations. Yes, some are still behind, like the United States. Some are still trying to figure things out, but there's a move towards legal. Obviously, I shouldn't say legalizing, but properly regulating. Put the guardrails in place. Yes, you're going to tax it. Yes, the government's going to get a cut of its of the revenue generated, but that's how the economies work and so forth. But this is a great sign, guys. Crypto is global. It's a global asset class. It's not specific to any specific country or region, and it is maturing and growing worldwide. So I'm not even going to try to pronounce this guy's name here, but he's the Secretary General of the party's Web3 project team told CoinDesk that the proposal will be included in annual tax policy guidelines that come before the country's parliament in January and will come into effect in the next tax year starting April 1st. Under the current corporate tax rules, token issuers are subject to a tax rate around 35% on unrealized gains for tokens that they hold if their tokens are listed on an active market. Holdings are taxed based on their market value at the end of the taxation period. This tax, in effect, drove project founders to leave Japan and set up entities elsewhere. Talk about a bad bill or bad law or policy there before, this change was coming in. So things are moving ahead, guys. We got to be patient. I've been sharing my trading view chart for Bitcoin, and it's a patience game, guys. I remember moments like this in 2018 where we were in that max pain zone, November, December of 2018, big crash down. And then, we had to be patient. And then we had a big rally in 2019, at which point I took some profits. It wasn't a rally to new all-time highs. It was not the start of the next bull market. Well, from a macro perspective, it was, but from a micro, it wasn't, because the price still went down after. And then obviously in March 2020, we had a big crash, the whole pandemic crash. And then after the next Bitcoin halving, that's when things started popping off, which was 2020, 2021. Right now, we are in max pain again. I believe this will continue into 2023. At some point in 2023, we will see a rally as the Fed pauses. The markets are just oversold, and it's just, we can't go any lower. We have to go up. And once again, this is around the Fed, and I think they're going to start QE at some point. Asset prices will start to pump again. And then the Bitcoin halving in 2024 is coming, and we'll have another bull market and new all-time highs. So you got to look at it from a macro perspective. You have to understand how the game is played here. You can do the same thing for stocks, right? Macro. Right now, stocks are not great, but I've been accumulating, buying, dollar cost averaging, and I'm not looking to flip it in the next 6 months to make money. I have a long-term outlook. So that's how I view the market. That's how I've made money. And many institutional investors, professional investors also view it that way. So once again, be patient. Look at the building that's happening. This is big news from Visa here. And we're just seeing things moving ahead from the actual builders, the people who don't care about the noise and the fear and the FTX nonsense. They're just building. Anyway, guys, let me know what you think. Leave your thoughts and comments below. Hit the thumbs up button, and I'll talk to you all later.